start day trading and making money off your phone today, or you already an experienced trader and just want to enhance your knowledge, this video is for you. So stick around and hit that subscribe button. Now, before I explain exactly how to enter and exit the market strategically, I do want y'all to understand that there's 4 main types of entry styles when it comes to how you can enter the market. So 1 is the aggressive style, 2 is the semi-aggressive style, 3 is a moderate or conservative, and 4 is a super conservative, man. And we're going to talk about all of them in this video today. So make sure y'all hit that like button, man, so we keep spilling the free game on y'all, man. Let's get it. So the first entry style we're going to go over is the aggressive, or some may call it super aggressive trading style. And before I start, I also want to mention that none of this is me telling you how to trade, because there's 1,000 different ways to trade, and I'm not necessarily going to be the trader that sits here and tries to tell y'all, oh, that style is wrong. It's whatever works for you, whatever best fits your trading strategy and your risk to reward ratio, man. So I just want to throw that out there. But I'm gonna start screen recording on the iPad so I can give y'all a couple of examples and visually so y'all can see how aggressive style trader enters the market. If I'm entering the market as an aggressive trader, man, what am I doing? I'm not waiting for any real confirmation candles. I'm being a part of the first wave of buyers or sellers that's stepping in the market just because I see a level that I may have seen before or may not have. You understand what I'm saying? So let's pull that up on TradingView and give y'all a couple of examples of what I'm talking about and show y'all if I was an aggressive style trader, how I would take the trade, man. So boom. We got the S&P 500 pulled up on TradingView. Make sure y'all got TradingView downloaded. This is essential for swing trading, day trading, because it gives you more context of the candles and the bullish and bearishness in the market versus just watching a linear line that moves a certain way and only shows you one point of data. So now we got this pulled up. We screen recording, man. If I was an aggressive trader and I'm looking at the chart from this point today as the market opens, right? So I would assess it. I would say, okay, in the pre-markets, this level had really big sell-off pressure. It kind of started consolidating around this little level. What did it do? It sold off heavy. So I would be waiting till I would mark my level of resistance. You could either do this with a line or you could do it with a box for more of a support zone, you could say. So boom, let me make this little box right here. All right, so now if you was wanting to play this like an aggressive trader and decided that you wanted to short the market as soon as it got to that level, boom, it would have came up here. How would have played this? We would have entered on the first rejection candle, not waiting for any confirmation afterwards or for this to break a new low of low or a high of high. Well, we would be saying a low of low on this certain scenario because why we want to short the market. So if it came to here, I would put my, let's go to the tools. I believe it's under forecast. Yes, short position. We'll put our stop loss somewhere around here and our reward down here. We could put it to the lows. We could put it to the new lower lows. It just depends on how long you want to stay in the trade, man. What's comfortable for your take profit areas. So entering the market as an aggressive trader right here, we would have won the trade. But on the flip side, if it would have been a false breakdown and keep shooting up past the level, we could have got stopped out and our risk could have been way more because as you can see, it doesn't have a real clear level of where overhead this might reject off of. You would just be playing a waiting game, which could eat up a lot of your profits and bait your buying power. Trust me, I'm telling you from experience. This is why this isn't personally my favorite trading style, but if it works for you, then go for it. You understand what I'm saying? Now let's look for another type of aggressive trading style. Okay, so you see, if we're looking at this, where the crosshair is at, if we're looking at it after market opens, man, the S&P 500, and it's coming down to here. We could look to our left a little bit, right, on the previous day, and this is more aggressive. This isn't super aggressive. This is semi-aggressive, what I'm about to say, right? We could look to the left and see okay, it came to this level the previous day, then shot up off of it a little bit. It didn't really have too much selling pressure under it. Okay, that's a little bit of confirmation, but we don't have any confirmation for that day that we're trading, because today is not yesterday in the stock market. I always want y'all to remember that. So we could set this level, this buy area right here, man, and say, okay, if I'm a super aggressive trader, I enter it right here. As soon as I start seeing a real rejection candle, right, this to the downside. So the rejection candle would be this little green candle. Inverted hammer heads is what we call them in the stock market, man. You see this little candle right here that the crosshair is right under? Boom. So we could enter the trade here. Let's pull up another short position, or a long position rather, excuse me, because we're saying the buyers are going to come in right here. When you're taking a long position on calls, you're saying the buyers are about to step in, man. So we could have put our risk down here. Again, we are aggressively trading, so we don't really have a set risk to reward ratio, if you get what I'm saying, which could be tricky. So now we could have took profits up there, and that would have been another winner. But let me show y'all where you could have a loser as far as false breakouts and other things on the market, man. Okay, so if we was an aggressive trader right here, right, and we just woke up, we're looking at the market, right, we didn't really do any assessment of the technicals of things, right, we see this key level got broken, shot up. It came down here and shot up. You understand what I'm saying? Now, if we come here, draw our little rectangle as a support zone right here. Let me drag this out, right? And we're like, okay, when it comes back down to right here, as an aggressive trader, I'm going to enter longs of this, right? Now, we would have got stopped out and took a major L unless we would have caught the profits right here on the super quick tonight. We would have took an L, because what did it do? The level got broken and never reached that point again during the day. So you would have had to set a tight stop loss if you was trading smart, so you could minimize your L's and maximize your profits, man. So that's aggressive and super aggressive ways to trade. Now we're gonna move on. Now, again, I'm not saying go trade a certain way or this way is better to trade than that way. I'm not saying that there's anything wrong with being an aggressive style trader. I'm just simply giving y'all the pros and cons so you know what comes with how you're trading, man. So next, I want to talk about the moderate to conservative type of trader, man. And these type of traders, they wait for confirmation, man. They wait for the stock to come back to that level and show another sign of rejection, which is even more confirmation that, okay, this trade might go your way. You understand what I'm saying? You've been a little bit more patient. It involves a little bit more discipline. Now, with this type of trading style, you may miss out on certain trades because that level might reject off of it and never give you a second confirmation that, okay, it's about to reject again, like a small double top. You understand what I'm saying? So you might have to be cool with missing out on more trades, but that's okay, because why? You might have a higher win rate because you're taking essentially which could possibly be better trades as far as the probability of it going your way, better setups, I should say. You understand what I'm saying? So going back to trading view, man, let's show y'all some types of moderate to conservative types of trading styles, man. So finna start screen recording again. So now we're looking at SPY on this day, right? We can say, okay, we're looking at it off the pre-market opens. We can draw our support area around here on the 5-minute chart, man. Boom. You draw a support area because you see it's not really any sellout pressure as soon as it hits that spot. So if we was conservative, we say, okay, we see one sign of rejection. Let's wait a little second. Let's run this play patiently and wait for confirmation that, okay, this trade may go my way. So you see it bounce off of it. Okay, the sellers start to come back down. Boom, it's kind of ranging a little bit. You see it comes back down to here, and again, boom, this is where we would enter if we was conservative, man. Where the crosshairs at? Where I got the crosshairs going around, because we see what? One sign of rejection, 2 sign, 3 signs. It's not, that level is holding up very, very strong. So we want to go on a long position here. So we would go to our our drawings section on TradingView, we will enter a long position, put the reward down here to where the lower lows on the last candles are at. Excuse me, my screen recording has stopped me out for a second, but we back into it, man. So we would, if I was a conservative trader, we wait, boom, one rejection candle, two signs of rejection. Okay, I like this setup now more to buy into longs of this. With its longs, we're buying calls, man. So boom, we would set our take profits up here, or it can move up here. And then what would we do if we're conservative? Because we're planning to play a little bit more smarter, a little bit more strategically. After it hits that high, what could we do? We could set our risk to reward ratio up here now. So you're stopping out in profits. Now you understand what I'm saying? If it hits your stop loss, you are still in profits on the trade because you adjusted your risk to reward ratio. You understand what I'm saying? So let's find another example of this, man. All right, so boom. Let's say we're looking at the SPY on this day, right around here, right? Where the crosshairs is at. So if I'm looking at SPY as a conservative trader or moderate trader, right? I would again find the support where the stock or ETF keeps bouncing off of. This is a good support zone, right? Let's say we right here with it. So we see it blow past it one time, boom, kind of starts arranging, okay, comes back down, sells off past it, okay. Now, we're looking at the zone, right? So sometimes it might not hit your exact key level, so that's why you could trade off of support zones instead of these levels, man. So you see it comes back down and then we get a what? Bullish engulfing. I told y'all about that in the last video. So let's say, all right, we seen one confirmation, we seen two confirmation. Now we want to enter the trade and not stay in it too long. You understand what I'm saying? Never overstay your welcome in these trades, man. So we go right here, put our long position, put our stop loss of very tight if you want to, because you can always re-enter the trade, man. So I usually put my stop losses tight to minimize the losses, man. And you see after it came down here, kind of pulled back a little bit, but it did what it needed to do. We could have took profits up here, or after we seen it start kind of consolidating right here, man, because you don't know what it's going to do after that consolidation. That's not a good bull flag pattern, if you understand what I'm saying. So these are ways you could enter and exit the market as a what? Conservative or moderate trader, man. Also, keep in mind with this style of trading, you might not get the cheapest price and you may have to sit through one little pullback to maximize your profits on these types of trades, since you wasn't the first buyer or seller in the trading interval, if you understand what I'm saying, man. So moving on, we're going to keep screen recording, man. And I want to tell y'all about the last but not least super conservative trading style, man. And what is super conservative trading style, man? These are the traders that wait for the recent lows to make lower lows to enter the trade, which means they're essentially riding the trend that's already started. You understand what I'm saying? Or on the flip side, high of highs or buying calls, waiting for the high of highs to get broken to buy the calls, man. You understand what I'm saying? They are definitely nowhere near part of the first wave of sellers, man. This is a more trend riding continuation plays, you understand what I'm saying, versus rejection plays, if you understand what I'm saying, man. Now the cons of this, they might have a bigger stop loss because of where the support and resistance zones are at. If you enter the trade while it's already on a certain trend, it may have to pull back to that support or resistance level, didn't go your way. And you just gotta understand and set your stop loss to what makes sense for you, so you're not losing a big amount on the trade or having to wait through consolidation all day or possibly all week, depending on how long your contract is, man. Especially if you're an intraday trader like me and want to buy and sell your contracts the same day, man. You understand what I'm saying? I want to keep my buying power for the next day because I don't know what's going to happen overnight. I don't essentially know what these hedge funds and people who can trade after market hours and pre-market hours, I don't know what they're going to do. We don't have any insider information, so we got to react to the market and not front run. You understand what I'm saying? Always remember that. So now we're going to go back to TradingView and I'm going to show you what would be examples of a conservative trading style, right? So, all right, we have a super conservative, excuse me. So now we have this little support area right here. Boom. Now, if I was conservative, right, or super conservative, excuse me, and I'm looking at it right around this point, I'm like, okay, it came down here, but it's kind of consolidating down. Let me wait a little bit. Let me have some patience. You understand what I'm saying? It came here. It didn't quite break these highs. You understand what I'm saying? Now we're waiting. Let me get this off the screen. Yes. Now we're waiting patiently. You understand what I'm saying? We didn't have to sit through this big old pullback. We didn't get stopped out because we haven't even entered the trade yet. Now we're waiting on for these candles to break higher than these candles. And what we do right here, we will enter a long position on calls right here. This may be one of the safest ways to trade, in my opinion, only because you're waiting for so much confirmation. You see what I'm saying? Now, you wouldn't have got stopped out. You would, if you would have entered on this little candle right here, you would not have gotten stopped out. Might have got it for the cheapest price that you could have, and just rode the uptrend, set through a little pullback, took profits right here, left some runners with the runners. And these are contracts, maybe 1, 2, 3, a small percentage of the amount of contracts that you have that you leave to keep running up after you've already locked in some profits, man. So we could have, again, changed our risk to reward up here after we're already in the trade and in profits, man. If it comes back down here, we're stopped out. If it doesn't, we to the moon. You understand what I'm saying? Let me show you another way to conservatively trade, man. All right, let's just say on the same day, boom, we see it starts making support right here, right where this crosshairs line is, right? Boom. Right, so we see, all right, tries to take off, is kind of consolidating. Let's wait. The big key thing for super conservative traders is what? Waiting. They got patience. So boom, after it comes down here, they're what? Waiting for it to break higher than the consolidation area, man. So what do? We enter right here, a long position right here, set our stop loss up there, and take profits up here, man. Or wait for the pullback. This can kind of mess up your theta though, which is essentially the volatility and how the price of your contract is moving for the day, man. So if you sat through this, it could possibly take away from your profits and you don't know if it's going back up for the day. I wouldn't advise doing that, and that's not how a super conservative trader would trade. They would take profits up here, man, be done with the trade. You understand what I'm saying? Not having to wait through that. So now, ending the video, man, I just want to point out, stock trading is like anything else, man. It's like if you have a basketball player, you have different types of basketball players. That all of these players can get buckets, you feel me? LeBron, he get buckets. Curry, he get buckets. KD, he get buckets, but they don't play the same way. LeBron, he trying to yam on you. He might try to post you up, back you down. What is Curry doing? He might come down the court, shoot a quick 3. You just gotta find what's best for you, man. And with that being said, just make sure y'all take notes of everything that was said through the video. Give us a thumbs up in the comments, man. If you want to join the private trading Discord for more information, man, my one-on-one mentorship and my live signals for profits, let's get it. Hit that link in the description, man.